So in this video, I want to introduce you to a way you can trade Forex, raise and trade currencies, and have the probabilities on your side, and it not be a loser's game if you understand the process. But you're not going to be able to start with $100. Get that out of your mind. That's silly thinking, right? Because just if you start with $100, you don't have a lot of capital to make any type of mistakes. So let's talk about three different things here, right? We want to talk about the good regarding Forex, right? It's some good. And then we're going to talk about the bad regarding Forex. And then we're going to talk about what's a better way to trade Forex. What is a better way to trade currencies? Your options if things go wrong. If you're using the traditional Forex, it's no way to adjust. You're either going to win or you'll lose. It's darn near binary. It's going to go up or it's going to go down, right? And your risk management is all about how you are exiting trades with stop losses and things like that. If you use options on futures trading currencies, you can have the odds on your side initially, and you can learn to adjust so you can improve your odds even more. That's an edge. This video is going to be about why Forex is for losers. And I'm using that title for dramatic purposes, somewhat hyperbole, but I really want to get it across to you that Forex in all its glory is not for everyone, and for most, the super majority, it's for losers. Literally losers, because that's what's happening to most people. They're losing time after time. You have all these different shops out there, all these different companies. I call them shops, and I'll explain that why in a second. But you have all these different companies that's talking about funding your account. And they have these different type of tests that you have to take to be able to get to a next level. And they're giving you this dream that you can start with as little as $100 and turn that into thousands of dollars. And that's just, to me, that's just a fantasy, and it's creating a bunch of losers, a bunch of losing traders. And so years ago, back in the Jesse Livermore days, and some of you have probably read the book Reminiscences of an Operator, and it's kind of given the story of Jesse Livermore, one of the greatest traders of all time, at least in the first, the 19th century. So, and he started what is called bucket shops. And he went around and he was able to read the tape, and it was all these different bucket shops around, having kind of retail investors go into there and spend their money betting on the markets. And he was able to successfully beat these bucket shops. But these bucket shops was there to take retail investors' monies. Make no mistake about it. And then years later, in the 1990s, we had the dot-com era. And the internet came around, and people were able to start day trading from home, from just a computer. And so a lot of companies set up these bucket shops again, but they were called kind of day trading shops. And you can go there and rent a table or a desk that had a computer, and you would pay them for commissions and things like that to be able to day trade. And that's was the people making the money, was these shops. But so many people used their retirement accounts and all the monies that they had, and they went to day trade, and most of them lost all of their monies. And so that's where the day trading pattern rule came about, is because so many people lost their monies, they decided, well, we need to kind of protect these people more. So they came up with this day trading pattern rule that you cannot have less than $25,000 in your account and trade in and out more than 3 times in a week, in a 5-day trading week. They did that because of the bucket shops, of the retail investor getting hammered by these bucket shops, right? Some of you have heard the story about when you had the gold rush, that the people who made a ton of money was the people who selling the picks and the shovels. And then a number of you heard of Levi Strauss, that started making Levi's during that gold rush. That's who made the monies. But you had all these people then and now the shops that are saying that they can fund you to make money, right? They can fund your account and you can make money that way, or learn to trade and go to different levels and things like that. It's all a loser's game. It's all a loser's game. So in this video, I want to introduce you to a way you can trade Forex, raise and trade currencies, and have the probabilities on your side, and it not be a loser's game if you understand the process. But you're not going to be able to start with $100. Get that out of your mind. That's silly thinking, right? Because just if you start with $100, you don't have a lot of capital to make any type of mistakes. So let's talk about three different things here, right? We want to talk about the good regarding Forex, right? It's some good. And then we're going to talk about the bad regarding Forex. And then we're going to talk about what's a better way to trade Forex. What is a better way to trade currencies? Right? So let's jump into discussing the good about Forex. And I have 5 points. 5 points I want to discuss. Number one is the low capital requirements, right? This is what attracts so many young investors, so many investors, period, to Forex, because it's a very low bar capital-wise to participate. I've been pointing out that you can start with as little as $100 with some of these funding shops, some of these bucket shops. But once again, that could be good and bad, having low capital requirements. Some firms out there will let you go 1 to 100 ratio, meaning that every dollar you put up, you'll have $100 of buying power. That is some significant leverage. Some is even higher than that, 1 to 500. Most of them these days are 1 to 50. The most you can get is 1 to 50, but that's still a lot of leverage. And it doesn't take a lot for your account to be wiped out. But that is one of the good things about Forex. If you understand how to trade it correctly, how to use that leverage responsibly, you can make a lot of money. And that's number two, that leverage, right? Leverage, if you understand how to use leverage responsibly, that can be a good thing. Number three, liquidity. It's a lot of liquidity in currencies. The currencies is the biggest trading market out there. And it's a lot of different currencies you can trade. A lot of the majors, a lot of the non-majors. And number four thing that's good about Forex is you can go long or short, right? You can either be long the dollar and short the pound, or you can be long the pound and short the dollar. You can go long or short. That's a good thing about Forex, right? And with Bitcoin, for example, you can't short Bitcoin yet, right? You can short some of the ETFs and things like that, but you can't short the actual Bitcoin. You're either buying or selling it. You can't short it and make money on the way down, unless now in these days using some type of ETF. It's a 24-hour market 5 days a week. You can trade currencies around the clock at least 5 days a week. That is attractive, right? That is very attractive to retail investors and to professionals, to banks and so forth. So now let's talk about the 4 bad things about Forex. So what we consider the number one bad thing about Forex is that it's at best a 50-50 shot, right? If you're betting that the dollar is going to go up and the pound is going to go down, well, that's 50-50. That's your probabilities. That is bad, because as we're going to talk about later, you can have greater than 50-50 probabilities trading currencies the way we're going to teach you, where we're going to explain how you can do it. Before we move on, I want to provide a little background about myself so you can know who you are listening to. My name is O'Brien, and I have been trading the markets since I was a senior in high school. I got introduced to the markets by an economics teacher, and it just fascinated me, and I knew one day I wanted to be a part of these markets in a significant way. So if we fast forward several years, I eventually became a registered investment advisor and had the license 65 for registered investment advisors, the license 3 for commodity pool operators. I ran a hedge fund, a volatility hedge fund, for a decade, and I'm now the CEO of the Dorian Trader that teaches individuals how to trade options and how to use options for supplementary income or primary source of income. So we hope you decide to check us out, to join us. You can do that from the link in the description area. We have a discount with the code YouTube, so check that out. You can try us out for 3 months for a very small price. And we give that offer because we understand that we are providing, or we believe we're providing, a significant amount of value, and that if you give us a 3-month trial, you will want to be with us for significantly longer, if not into perpetuity. Let's now jump back to the bad about Forex. Number 2, too much leverage can kill. So if you using 1 to 50 or 1 to 100 or 1 to 500, that can kill if you're not using it responsibly. And most are not. When you're starting with $100 or $500 or $1,000, it's just too small of an amount for you not to blow up that account. And a number of you watching this video understand what I'm saying. You've blown up several accounts trying to learn how to trade Forex. And yeah, and sometimes blowing up accounts is the process of learning, but it shouldn't be darn near 100% probability that you're going to blow up your account. Number 3, you got bad broker firms and lack of transparency. So you have Forex firms going out of business often because it's not a regulated market, right? It's not a lot of transparency, and you're going up against your broker darn near, right? You don't have a clearing firm, right? And that's number 4 that I want to kind of loop into. Number 3 is that it's no exchange. It's no exchange with Forex. You have third-party risk, right? If your broker goes out of business, you can lose all your monies with Forex, and that happens often or too often. So let's now talk about the best way to trade Forex. Right? Let's talk about the best way to trade Forex. So number 1, you can trade currencies using options on futures. By doing that, you're going to have a better than a 50-50 probability when you do it. You can have as high as a 99% probability if you are using options and you acting as the seller, if you're primarily selling options on currencies using the futures market. Okay? Using the futures market, you can have better than 50-50 odds. It's no longer a coin flip. It's no longer a coin flip. So that automatically helps you instantaneously have at least a probabilistic edge. Now, number 2 is that you have the ability to adjust your options if things go wrong. If you're using the traditional Forex, it's no way to adjust. You're either going to win or you'll lose. It's darn near binary. It's going to go up or it's going to go down, right? And your risk management is all about how you are exiting trades with stop losses and things like that. If you use options on futures, trading currencies, you can have the odds on your side initially, and you can learn to adjust so you can improve your odds even more. That's an edge. Number 3 is that it's on an exchange. The Commodities Futures Trading Commission is on an exchange of the CME. It's on an exchange that's regulated, and so you do not have that third-party risk. If you win, you're going to get paid. And number 4, you have leverage. You have enough leverage to make a lot of money using options on futures, but it's not too much leverage. Okay? You have enough leverage to make a ton of money, but not enough leverage to get ridiculous, to put your risk way too high. We would like you to consider joining the Dorian Trader so you can learn how to trade Forex with the probabilities on your side. We can teach you that. We can teach you how to consistently win and be able to count on monies on a weekly or a monthly basis through trading options on futures, trading currency options on futures. This is the smart way to do it, right? It's the winner's way. You want to be the casino. You want to have the odds on your side. You want to be the insurance company. You want to have the odds on your side. You don't want to play in a game that you have most of the time at best 50-50 odds. And that's what people are doing in the Forex world. But it's not just having risk of the probabilities, just a coin flip, but you have that no exchange risk. You have that broker risk. That's a game for losers. And I'm talking about retail investors. Obviously, it's a bunch of banks and things like that. They're doing awesome in that arena. But that's the big boys. That's the big boys and girls. You need to be in an arena that gives you the odds. So if you're interested, we encourage you to look at the link in the description area. Click on that, join the Dorian Trader, join our trading club, and you'll be able to learn a ton from us. We're trading live on a daily basis, and you will be able to accelerate your learning process and learn the right way. Right? right? You'll be able to accelerate your learning process and learn the right way. Thank you for watching this video. We hope to see you in the next one. Bye for now.